right, we are on, Jane.
All right, beautiful. Did you hit record, Mandy, so we can put this up later?
I did hit record.
Perfect. Welcome, everyone. We hope you're having a wonderful evening or morning, depending on where you are in the world. I myself am in Canada, and Mandy is in Australia. So we're covering the globe to be present with you guys right now to help you along in your trading. We just wanted to welcome you. Basically, this is for you guys. We did have an overwhelming response, and we ran out of room for the free webinar. So I do apologize for those people that are watching this later, but we do have space available for our 6-week seminar that's coming up November 13th. And we also had an overwhelming number of questions that people sent in. And we're trying to get to all of them as best as we can, but we only have an hour this evening. So we are going to go over the questions that were duplicated and try to help you both on the technical side and the psychological side so you can get a taste of what we're doing in our training that we do have coming up. As far as what we're going to be covering this evening, it's basically, what we would recommend to somebody getting into day trading or trading nowadays, as far as how to prepare yourself, also how to find tickers or the stocks to trade, as far as your position and your risk management, your sizing, and also, let's see here, basically how to create your watch list and the feelings that you might develop from that, feelings of overwhelmment by having too much going on at once, as well as a fear of missing out. A lot of people have that fear of missing out, and it can sometimes sabotage yourself. So that's it for the outline for the evening. As far as going forward, basically getting into trading, I'll start with the technical side on my end. And it would be, basically, I would recommend to somebody, there's so much information, like we could go on for hours, Mandy and I, trying to teach you everything there is on the technical and psychological side of trading. But really, it's got to be, you have to start studying. It's not going to be an overnight change for you. If somebody wanted to be a dentist, they don't just go and jump into a dental office, pick up a drill and say, hey, I'm going to go ahead and repair your teeth. No, they have to go to school, they have to study. It's the same thing in changing your profession to become a trader. You have to study in the beginning. You have to have that learning curve, understand what the market lingo is, understand what a trade is, what type of trades there are, the different softwares, what is going on with different brokers. Different brokers run their software differently. There's not one uniform platform. What's going on with scanning software and alerting software? Again, everybody has their own created software, so you have to understand it, and there is a learning curve to that. So if you just rush into it and you jump into it, you'll be in that 90% that will typically fail. So you have to give yourself the time to learn what you're doing. And then as you learn,
you also, right, have to understand yourself. You have to understand what your software is in that brain, how that is working, why you do what you do, how you can change what you do if what you're doing is not working. So also, it's really important to not only understand the markets, but you also understand yourself and your strengths and your weaknesses, what makes you tick. And so this is why Jane and I believe you're a perfect match, because Jane will cover all the topics that she just mentioned, and I will cover then the software and your brain side of things.
Definitely. And so once you really start your studies into trading, I would say go ahead, study first, learn some of the software components, and then start paper trading. Build up your consistency and confidence with paper trading. Figure out a strategy that's really going to work for you, because right off the bat, it's gambling, right? You have a 50-50 chance that you are going to profit or lose. So if you can practice and find a strategy that works for you with your personality, you will be able to do that with fake money. Don't put real money into the market and just throw it away. Learn with fake money what strategy you're good at, and then you can move forward once you're consistent and confident and move over to a broker's account and then learn their software. Again, start with small positions. Don't go ahead and throw large positions in, throwing the entire amount of your account in. Oh, I want to make a profit. I can see this coming. But you might not know how to execute a trade. It happened to my husband. He went in, he's like, oh, it's going up, it's great, but how do I get out of it? How do I lock this profit? Well, he didn't have the practice. And thankfully, he traded with 10 shares of a stock. So he did not lose a lot because it then ended up coming back down before he could get out. But it was an experience for him. And then once you have
But
that, you have the knowledge, you have the practice, and then you understand your brokers, you can slowly position up once your consistency is profitable and you can grow your account.
but the reality, Jane, is that we all know that. We all know what to do, and yet, so many traders don't do what they know because they're so eager to get started in trading, and it feels so good getting started with your own first real money until you actually start losing your own first real money. So that's when a lot of turmoil starts happening inside of yourself. And then, the vicious cycle starts with doubting yourself and thinking that maybe you're never able to become a profitable, successful trader. And I think this is really something that I've found with you, that you, even though you still had those urges and temptations of jumping to the market with real money, you actually knew that this is not going to help you to become a profitable trader, a professional trader, and you just did what needed to be done, like regardless of what you wanted to do. And this is the definition of integrity, doing what you say you do, not what you feel like doing in the moment. And this is the definition of being an adult and a mature trader. Maturity not in terms of age, but in terms of taking responsibility, that yes, in that moment you feel like doing something totally different, like putting on a big position because it feels so good. But knowing, on the other hand, that this is not going to help you to create consistent, profitable trades and to create habits that lead you to becoming a top trader, a trader that does perform in the top 5% of the trading world. So, yes.
I did have my beginning though, where I did lose and burn through a $6,000 account because my daughter was home. I realize now, guys, that life also happens. You have to be aware of what's going on outside of your life, which I'm sure Mandy will help highlight, because it's not just coming and sitting in front of your desk. Your mind is also there. It's a big part of your trading. And when I first started, my daughter was 6 months old. She was at home and it was not working. I had to put everything aside until she was at daycare, where I could really focus on studying the market. And that's when I saw the improvement, was once I dedicated myself. And everybody has the opportunity, male or female, to go forward and learn how to study to trade. It's a matter of how bad you want it. And that knowledge is going to compound daily, just like interest in a bank account. Your knowledge is going to grow. And basically, like our training that we're doing, it can only improve your trading style, because there's always tools, and every day I'm learning something new. I'm still a novice at this as far as people that have been trading 20 years. I've been doing it for over a year now. I am profitable, I am consistent, but there's still stuff I learn every single day, and I try to take that in and grow from it.
Yeah, it's really interesting what you're saying about your daughter, Jane, because I see so many traders, they have challenges in trading, and then they try to solve those challenges that they have in trading. And what it actually is, if you look at your whole life needs to be in balance so that you can perform as a trader. But traders don't look at that at other areas of their life. So if you have a spouse that doesn't support your trading endeavor, oh my God, it's so much harder because there is so much at stake. We need the support of our family. Now the question is, how do you manage your trading journey if you don't have the support, because that's the reality as well. How do you keep a healthy balance between your health, right, and your trading life? Because I know that's what happened to me, and I think almost everyone else, where I was stuck on the computer screen day and night, and that had a massive impact on my health. I gained a lot of weight. My chi didn't move anymore, as my acupuncturist says. I started eating unhealthy food, lots of chocolates, and when you start having unhealthy eating habits, that actually affects your decision-making process in a very, very bad way. You can't think clearly anymore. You get tired. You get exhausted. That's when fear kicks in. That's when scarcity thinking kicks in. That's when you doubt yourself because you let yourself down in all other areas of your life. right? So it's really important that we look at each and every single area of your life and see how that is actually helping your trading journey instead of, working against it.
Definitely. And that's something, guys, every single day when I sit down to my desk, I try to concentrate. I set up for my day, I'm going forward and I'm trying to find those stocks that I'm looking for to trade. But I can't be distracted with, okay, I just dropped my daughter off at daycare. She's a little fussy. Am I worried about that? No, I have to put everything aside. And basically, when I go forward into finding the stocks that I want to trade, whether it's the middle of the day or the beginning of the day, I use two different softwares. I use Equity Feed, and in the beginning and the open of the day, I'm looking to see what's active based on my trading style, which is a reversal trading style. I'm looking at the stocks and also momentum trading. I look at the stocks that are gapping up for the day with the biggest percentage gainers and gapping down for the day, because I find that those have the most volatility, the most volume, which the volume is going to be easy to get in and out. And then as the market opens, I know that those are very highly interesting stocks because everybody else has already traded them before the market. I go into my parameters and I set it basically from $5 to $100, 100,000 trades with 100,000 in volume and 100 trades before market open. So those are the ones, if you ever see me on Twitter, those are the ones that I post on the gappers, the top 5 and the lowest 5 for the day. And then once the market opens, I have trade ideas where I have RSI extremes that I've set up and the big movers for the day up and down as well. And it's really cool because they have audibles that you can set up on your alerts. So I have it, I'm looking at my stock screens, but I'm getting the audible alert yelling tickers out to me to check out those tickers. Go ahead and see what's moving, see what's at an extreme point, because to me, I find that if it goes to an extreme, it sort of has a rubber band effect where it's going to come back to the middle. Or if you know anything about statistics, you're going to see that it's not going to lay at the extremes like a bell curve. It's going to go back towards the middle. The probability is it's going into the middle of that bell curve. So it's going to come back to some sort of normal. And I've actually noticed that it follows Fibonacci. I don't use that as an indicator, but I do see that it does come back roughly 30% from that extreme. Depending on the price range for the day, if it's a $5 price range for the day, you're going to see maybe $1.25 that it comes back up. And who's going to be upset about taking a profit on that? How about finding stocks and tickers for you, Mandi?
What is actually really interesting before we get into how I do it, when we actually did Jane's behavioral profiling, behavioral preferences, she's what we call a mismatcher. So a mismatcher is a person who likes to be different, who, if I would say the sky is blue, Jane would say, it's a little bit of gray, hey? And this is what makes her actually a great trader, and this is why she performs really, really well with reversal patterns. If you have someone who is more a conformer personality, they go really well with trend trading. So Jane naturally found this trading style that suited her. And then when I looked at her personality profiling or behavioral profiling, it actually told me that, she found the right path for herself. And many traders, they go to a trading seminar, they try to learn someone else's trading style, which might even be successful, right? But it's not successful for them because it doesn't fit their personality profiling. I'm also a mismatcher, so I'm really, really good at picking reversal patterns. I'm not so good at trend trading. So I know exactly when I perform my best, and I trade at those times extremely, I focus extremely on trading during those times when the market does reversal patterns. And when the market is trending, I just look for a different market. So you also need to know yourself, how you best perform in which environment. And once you know yourself, then you start looking at the markets that you pick. Then you start looking at the trading style that you pick. So I only trade the DAX. I've been trading a little longer. I've been trading for over 15 years now. When I started with stocks. I started with options. shortly after CFDs got allowed in Australia, came to Australia. It was in 2002, and I started trading CFDs. You guys in America, you don't have CFDs, which is I find cruel. I can trade a one Dow contract with $45 margin, and I know the cheapest that you guys can get is $400. So I was able, even though I didn't have much money at the time, to actually build myself up because I didn't need much money to get started. So that was really useful. I don't use any trading scanning software. Simply, I've never come across one, and I'm now investigating what Jane is doing because it fascinates me, and I might add that to my trading style. I am a big picture pattern trader. I am extremely visual. So in mathematics, I was very bad. I failed my course twice at school. What I was really good at was geometry. And this is how I analyze the market. I look at the geometrical patterns in the market, and based on the geometrical patterns, I make high probability forecasting of what will happen next. I use candlesticks. I'm really good at candlestick trading, but I use everything in a combination. I also add Fibonacci retracements. I don't use Fibonacci projections. So I use moving averages, and I use stochastics in order to identify reversal patterns to get a more detailed confirmation of when to enter a reversal pattern. So divergence is what I'm using it for. Now you can see that it's very, very different to how Jane trades, and yet we are both extremely successful traders. And that's encouraging for you because you just need to find your style, right?
And that's what I was talking about in the beginning. When you want to get into trading, I found Timothy Sykes online and I used his tools. And then he was saying, his goal is to have people become self-sufficient. Well, his style just doesn't work for me. And so I started doing research and I started analyzing stocks and watching the market and putting it into an Excel spreadsheet. And I found the pattern that works for me where I'm comfortable with it. My risk tolerance for moving forward in trades, to me, I like the extremes. So if it's already showing on the chart that it's reversing, then the risk to me is minimized because people naturally, with having a fear, say a short is going to go ahead and cover, well, they're greedy. They're very, most traders are greedy for the most part, and they're going to go ahead and try to wait until that last moment to cover. And then what happens is, in my scenario with doing reversal bottom bouncers, is that you have the traders that they wait until that last minute, then they start to cover. So you've got the shorts that are covering. Then you have the short stops that start to get hit. And then you have the long buyers that are coming in. And so it starts to go parabolic towards the upside. And it can go very, very quickly because of the fear of these people losing their profit. Their stops are kicking in, which will automatically, if it's just a regular stop trade instead of a stop limit, it's going to go ahead and it's going to take what the market offers. And so if there's no sellers at that point, it's going to continue to rise up quickly. And then you have the longs that are jumping in as well, seeing that the reversal has already happened. So as far as for me, the risk tolerance right there is minimized, but also looking forward when someone's asked about risk and position sizing, that basically you need to look at your trade in the worst case scenario first. What are you willing to lose? If you're willing to lose $100 and you take a 1,000 share position, that's going to be a 10-cent fluctuation. So your stop is going to be pretty close. If you're willing to lose $100 and you take 100 shares, you can give it a full range of $1 before you can go ahead and get stopped out. So it depends. When people talk about position sizing, think about what you're willing to lose when you first get into that trade, because the riskiest part of getting into a trade, the riskiest part of a trade is when you first get into it, because is it going to go in your direction or is it going to go the opposite direction? And if it goes against you, cut that loss quickly. I'll just share my quick rules that I have right here. So I think, family first, protect that capital. And then what's the market doing? Is it the right setup? Then cut losses quickly. You know, some people say cut losses quickly is number one, but I have everything else in front of it. And then number five, as I always say, Carpe Profit. Seize those profits along the way, because each and every one's going to grow your account.
And I
Okay,
look
Mandi.
at the market in such a different way. I don't think about what traders do, what traders think. I have my, so let's say I go long on a short reversal pattern, and I stay in that trade as long as the price is above my moving averages. I'm typically trading on a 1 minute chart. But sometimes, the 1 minute entry stays long on the 5 minute. It stays long on the 15 minute. It stays along on the 30 minute. So as the time frame increases and there is no reason for me to exit my trade, I stay in. And I solidly look at that in terms of, is it above my moving averages? I don't think about what other traders do because, to be honest, I can't relate to that. And it's really interesting because, as you know, Jane is a trained pilot. So Jane does really well with using the scanners from Trade Ideas. I think it's the scanners from Trade Ideas, right, Jane?
Yeah,
That you're
correct. Yeah.
using? Yeah.
Well, no, I use that
Because
equity feed for my charting software.
equity feed. So because this is what she is used to, this is what she has trained herself to be good at. And so everyone can do that. But what most traders do, they get a scanning software and they say, well, it doesn't work. It's not useful. But maybe it's them who don't work. So when you get a scanning software, you also need to train yourself on how to use that best. It's like driving a car. If I give you a Ferrari and you don't know how to drive it, you would never say, oh, the Ferrari doesn't work. It's like, no, I have to learn how to drive the Ferrari, right? So, yeah.
And what about risk management and the psychological aspect?
Yep, risk management is a really interesting one. Most traders have read somewhere to use 1 or 2% as risk management. That is, from years ago when there was no such thing as margins, when the markets were differently, when we didn't have online broking. And so I don't know, I don't subscribe to this 2% rule. But on the other hand, it depends on your personal risk profiling in terms of what can you deal with emotionally. So if, I have worked with traders, they had like $100,000 account, but as soon as they would approach the $100 loss mark, they couldn't deal with it anymore. And they would start scrambling, trying to recover, to get back to $99 before they were able to hit that, close out the trade button or mouse button. So again, it comes back to knowing yourself so well. What is your personal threshold of how much you can emotionally deal with in losing, and then expanding that as your account grows. I use 3% as a guideline for myself because I know I can deal with 3% easily. As soon as I get above my 3%, I find it hard to take my losses. Then I start, talking myself out of it, and finding reasons of or why it might return back into a profit as soon as I close out this trade, and so on. So it's really important that you know what your personal threshold is of how much. I mean, it's never comfortable to lose anything. I still hate losing, and even though I see all those beautiful sayings on Twitter, successful traders, they don't mind losing, and they don't have emotional challenges, and it's not true. Like, the most successful traders I have worked with, they still have emotional challenges. They still hate losing money so bad. They get angry. They kick the desk. They're not like the super person. They're human beings, but
Yeah,
yeah.
but I mean, I've even dealt with big losses. Like I had a $9,000 loss, and it took me a good 2 weeks before I actualized it. And you go through the steps of denial, I think, and you have to
Yeah.
first you deny that it's happening, and then you accept that it's happening, but you get angry about it, and then you have to actually close out the position. But it's when you're able to go through that process and do it in a faster fashion and know that You are imperfect. You are human. You are not a computer. So you are going to have those losing trades. So set up for the worst case scenario first, and all those profits, guess what? Those are great. They're wonderful. They're going to grow your account. That means you're doing the right thing. But it's going to happen that you will have these losses, and you need to prepare yourself for it from the beginning and know that you're not going to be perfect. As much as you know, every day the market changes. The market is irrational. It does what it wants to do, and just go with the moment of the price action, in my opinion, and don't hope or want for some action to happen, because that's when you're going to end up getting yourself in trouble. You're going to end up being a bag holder. You're going to end up having a bigger loss, and it's going to hurt longer. It's going to hurt more in the long run, and it's going to eat up your account more quickly, and then your capital is going to diminish. So just cut the loss fast. Okay, it was a mistake. It was a bad entry. You can watch that stock. You can go back in. Just get a better entry. You can start over with that stock and profit off of it.
And if you have difficulties cutting your losses, then there's several areas that we have to look at. And we will cover all of them obviously in the seminar, because it's just not enough time. So the areas is at looking at what is your relationship with money. You know, we all have heard the terms of scarcity thinking. If you have that scarcity thinking, where is that coming from, and how can we flip that over into abundance thinking, that you know that even if you have to take that loss, that you will be able to make that loss back and even more. And you know, it's you need to look at your thinking strategies, which goes into behavioral finance. So where you maybe talk yourself out of taking that loss, hoping for, you know, being rescued out of it. And then we have to look at how do we need to change your thinking strategies so that you are able to talk yourself into taking that loss fast and getting on with life. And what I always really see, which is really interesting, traders who are having difficulties cutting their losses, they actually tend to stay in bad jobs and in bad relationships as well. They're not cutting what's not good for them. Jane, just here's a question for you.
Yeah.
Hi, Jane. Currently started paper trading and using Thinkorswim. I wanted to get your thoughts with what am I currently using, or if there's a better paper trading account to use. What are your thoughts on that, Jane?
Well, as far as when I was into paper trading, I did it the old school way with pen and paper. I didn't even know about the electronic softwares, but I'd already gone through working with a real live account and losing the money. So I'd already managed the knowledge and learning curve of getting into the trading software and practicing with the different types of trades, as far as the limits, the markets, stop limit, trailing limit. And so I'd already experienced that aspect, but I just did it on paper, and I wrote down my time, the price, the share amount that I was going in, and then my exit time and exit price. So I know Thinkorswim has it. I know that TradingView has it, Interactive Brokers. But as far as actually saying which one's the best, I haven't had firsthand experience. My husband did use Thinkorswim, and he really enjoyed the software and enjoyed learning with it, because it's great software that was developed. But I can't personally say one is better than the other. I just know that those are some of the ones that are out there.
And it's also, again, you know, personal preference. Sorry, I always come back to what is your personality type, which country do you live in? Because here in Australia, to use Thinkorswim is not so useful for us. But we have access to lots of online brokers where you can trade, for example, currencies where you make or lose 10 cents a pip. Like, that's nothing, right? You can start with $20 in your account. And so I didn't really paper trade as such, because I had access to these really, really small trading accounts. And that was, I think FXCM does it as well. I'm not quite sure. I'm not a big fan of FXCM, but it's just a personal preference, because you have better brokers here in Australia. So the other question is, what is it that you paper trade at? Do you paper trade stocks? Do you paper trade futures, forex? Like, you know, it also depends on the market that you're trading.
Yeah, definitely. I mean, Mandy's in Australia, I'm here in Canada, and guys, you know, there's markets you could really trade 24 hours a day if you didn't want to sleep. There's always a market available for whatever schedule that you have going on in your life. If you're only able to trade at night on the East Coast, well, guess what? You know, you could be trading the Australian market. And if you want to trade in the middle of the day, you could trade the DAX. If you want to trade the U.S. market, great. You know, I know that I have some followers from Hawaii. I have followers in Australia. I have followers in Afghanistan, all over the world. And you don't have to just be stuck with the U.S. market. You can look at other markets. They typically all tend to trade in the same fashion. However, some markets have more volume available to them, so you do tend to find more volatility, and it becomes easier to get in and out of a trade, and you will see larger price ranges. But as far as paper trading, it's going to depend on what you're looking to get into, and that goes back to finding the strategy and the style that's comfortable for your personality.
Yes, I personally went through all the trading strategies that you can think of. You know, I studied harmonics and Gann and chart patterns, candlestick trading. I've done the whole round of trading, and out of each trading style, I picked the bits and pieces that worked for me, and out of that, I created my own trading style. And if I were to teach you my trading style, it would work for some of you, but not for others. So that's why Jane and I, we are on a very different spectrum of trading, and that's why we think we can cover pretty much everyone who has a different trading style. So Jane, as a pilot, is a very structure-oriented person. So there's 4 personality styles. And there's people who love structure, they can't live without structure. I'm the opposite. I hate structure. I find it really, really hard to become friends with structure. So I created myself a little, you know, what's it called, like a little ways of how I can avoid structure. So the kind of personality types that don't like structure, they will work with my trading style much better than with Jane's. So this is pretty much the 2 extremes, the ones who hate structure and the ones who love structure. But structure in trading is super, super important. It's like being a pilot. You don't want to fly with a pilot who doesn't follow structure, right?
No, definitely. And, you know, that comes back to as well, once you figure out your trading style and strategy, create your rules. What do you feel comfortable with? Don't get into a trade that you're not going to be able to sleep at night. It's not the right trade. It's not the right style for you. Your risk is going to be too high at that point. And that goes forward too with basically finding a watch list and a ticker. You know, in the beginning, like somebody had emailed me saying, well, I feel like I'm overwhelmed by the number of tickers that are out there, but if I don't create a watch list, then I feel like I'm going to miss out because I'm afraid I'm going to get into a slow trading stock. Well, you know what? There are going to be some stocks that you even put on your watch list that don't pan out. But in the beginning, I'd say pick maybe 1 to 3 stocks, watch them, learn the price action. Once you're comfortable watching those different stocks, like Mandy said, I'm an instrument trained pilot, so I have a scan that I'm used to. I'm used to looking at maybe five different stock charts and 2 level 2 you know, charts as well, so that I have all that information, and I've got tabs going as well. So I have that ability, but it's learned. I've learned how to do that, and I'm comfortable with it. In the beginning, when I first started trading, I wasn't. I couldn't look at 5 different stocks going off at once. I didn't have that ability. And so it's practice and training. And when you first create your watch list, start small. Go ahead and build the confidence. And then once you get comfortable, build from there. You know, you don't go and say, I'm going to go build a house without a foundation. You need that foundation first, and it needs to be solid. And then you grow from that. And you make it a good trading strategy and trading plan for your day.
And the challenge is, of course, FOMO, fear of missing out. So the overwhelm thing is so interesting again, because when someone talks to me about overwhelm, and a lot of traders talk about overwhelm, what I would like to know is trading the only area in your life where you currently experience overwhelm? Because what I found is that, again, trading is just mirror image of what else is going on in your life. Do you experience overwhelm in other areas of your life as well? That means do you have a tough time paying your bills? Do you have a tough time in your relationships? Is it maybe that you don't have enough structure in place that help you to be on top of the complexity of trading? Why don't you have the structure? Is it because you don't like structure like me, or is it because you simply haven't found the right structure for that works for you, or is it that you don't know how to find the structure and how to implement into your trading that helps you to be the best trader you can be? For example, I only focus on the DAX and the Dow because this is where my strength lies. And I used to be a show jumper, in my previous life on horses. And I trade like I used to show jump. I scalp. So I see a trade building up. I focus on the trade. I take the trade. I make my money or lose my money and then move on to the next obstacle or the next trade. So if I were to trade 10 different markets, which sometimes I do, because then I see like setups everywhere, and then it's like the fear of missing out, or not really the fear of missing out, but the fear of the wanting it all, kicks in, and then I get into all trades, and then I start feeling uncomfortable and oh my God, what have I done? Am I over leveraged? And on the back of that, I'm not able to make really good trading decisions. So I know myself so well by now that I feel the slightest feeling of discomfort, and then I know I have to change something. I either have to reduce my positions, or maybe I have to go for more runs to feel better about myself. So it really depends on what is going on in your life that actually would trigger the overwhelmed in your trading as well. Very interesting. Yeah.
Yeah, and with the fear of missing out, I mean, I see that a lot with people that they are, there's a stock that, or they know someone that trades very fast momentum stocks that are low float and they're going to skyrocket from $2 to $8 within the day. And they see it when it's hit $6 because maybe it's all over social media, or maybe they got an alert scanner that it's just now breaking out when it's already had a big run for the day. And then they get into the end and they say, oh, I keep getting in at the tops, and then I'm losing all this money because it's coming down so quickly. And it's a matter of, you've got to stop. In the beginning, I started and I journaled all of my trades. Here is my trade journal. It's pages and pages and pages of trades. And that's it. You have to be accountable for your trades. And if it's not working, analyze it. What went wrong with the trade? Look at it. Look at yourself. What was going on with your day? What was going on with the trade? Did you have a bad entry? You can have a good trade where you exit at your stop loss. You hit your stop, you exit, and it drops $5. Well, guess what? That was a good trade where you minimize the loss, and you don't need to beat yourself up over that loss because it could have been catastrophic. Now, if you continue to let it run, you have to figure out, what was I doing? Why did that happen? What can I do to prevent that in the future? Okay, it's done. It's in the past, right? You have to accept it. You move forward. How can I improve? And same thing. Chart your winning trades, track them. What were you doing right? And look to see, because that's how you're going to improve yourself. And in the beginning, that's what really helped me, was writing everything down. Go ahead and see, because it's you and the market. There's nobody else to compete against. As a female, I never thought I can't do this because I'm a female. I just thought I'm going to do this, and I'm going to work hard, and I'm going to study. And everybody can do it if they have the desire and the willpower and the motivation and the energy that they put forward to it.
And it's really interesting again, because I didn't come from that space. Like, I started trading, I doubted myself for the first few years, and hence I did really badly. The reason why I doubted myself was because I'm a younger sister, so I have an older brother, and he is the super successful one. And the position that I had in my family was, the sweet one. So I was always the lovely little girl, and my brother was the successful person, and I never saw myself as someone who can be successful. And I had to work through all of those limiting beliefs and those value conflicts and those fears in order to break through and to make it in trading. And it took me years, it took me like 6 years working on myself. I did any seminar under the sun. I did like landmark education, all the Tony Robbins work. I did became a life coach, obviously, studied NLP. I'm an NLP master trainer. I did everything that I could in order to work through my stuff. And it took me such a long time to break through my fears and my limiting beliefs until I actually made it. And it's a good thing because now I can teach you guys because I know exactly what it feels like. And I know exactly what it takes to break through those limits that we put onto ourselves. So, yeah.
And that's it. Everybody has their own timeline for success. It's not going to happen overnight. It's going to be how much energy and time you devote towards it. I had the luxury of being off on maternity leave because in Canada they give you a full year off. So I had that time where I could devote 8 hours a day, watch the market, watch DVDs, watch videos, research, go to Investopedia, read books, and invest in the knowledge in myself so that I could grow as a trader and not be fearful of, I don't know what I'm doing. You don't know. You have to start somewhere. You have to start somewhere with your knowledge and with your trading experience, and it's all going to grow from there. So don't be fearful about it because you can do it. It's just a matter of how much time you can devote to it, how much energy you can devote to it, and it's going to get better and it's going to get easier, but you have to be willing to work on it for yourself.
And it's also, if you guys know Tim Ferriss, the 4-hour work week, he found out that you can learn a language within a week. How do you do that? Foreign language, obviously. How do you do that? You need to know what are the top 2,000 words that you need to use in order to form sentences that are mostly used. You might not be able to have an in-depth political discussion, but you are able to communicate freely and travel in the country and, make friendships and have conversations. And it's the same with trading. So it's not just about spending the 10,000 hours to be a successful trader. It's also knowing exactly what are the important parts that you need to train yourself in order to become successful as a trader. So in my model of the world, there are 4 components. One is obviously the technical skills. You need to know how to read the market and need to know your own style on how to read the market. You need to know whom to follow and whom not to follow. We all know there's a lot of traders who pretend to be successful, but they're not really. You need to know what trading software to use that's great for your market. So that's like the technical stuff, right? Then you need to look at the emotional side of your trading, so the trading psychology. If you need to learn to understand your emotions. The market is like a mirror for what's going on in your life. And then instead of hiding from it, you need to look at it and face your fears because it's so uncomfortable to look in the mirror and say, shit, that's really what I say sometimes. Shit, this is really what I do. This is really how I think. This is what made me not take that loss and then deal with it, clean it up, and grow in the process of it as a trader. The third component is learning the thinking strategies that make you a successful trader. So I think it was Einstein who said education is the teaching of how to think and nothing else. And I find that a lot of traders, they are not becoming successful because simply they don't know how to think. Let me give you one example. So Daniel Kahneman, who got the what's it called? The Nobel Prize in Economics, 1978, I think it was. He wrote this book, Thinking Fast and Slow. And he did a lot of experiments with people on how they make financial decisions. And one of the experiments was that he went to one shop and he said to people who bought a $25 calculator, for example, he said, if you go down to the other shop 10 minutes down the road, you can save $5. You get the calculator for $20. And so I think that was like 76% of people went down to the other shop to get that $5 in savings. And then he did the same experiment with $125 products. And he said, again, if you go down to that shop down the road, you save $5. And the majority of people said, oh, no, it's not worth it for me. It's just $5. So what is the error in thinking here? The error in thinking is that they looked at the $5 savings in context of that product that they bought. And this is what traders do. They look at the profit and loss in context of their trade. It's like, oh my God, I'm losing $100 here. I don't want to lose $100. But what they had to do in that experiment, which would be a prudent financial decision, is to look at the $5 savings in context of their income, because the income is usually fixed. So the $5 savings of the income is the constant, is what really should be looked at. But a person who is not trained in financial education and making prudent financial decisions does not think like that. So we also will teach you how to think in such a way that you make much better financial decisions on the back of it. Super, super interesting, super useful. And once you learned it once, you have it for your life, and not just in trading, in all other areas of your life, it will be applicable. Yeah.
Definitely. I mean, guys, we're getting close to the end here, and I think we'd like to go ahead and open up the floor to any questions that you guys have. I mean, I know I have a bunch that people have emailed, such as, RSI extremes, the scanners, that sort of stuff. I can shoot out, if you already have trade ideas, just shoot me an email at carpeprofit@gmail.com, and I will shoot you my cloud link for my RSI extremes. I can share them, but it only works if you're a subscriber. And you can use the same setups if that works for you. There's other questions for sure, but if you have some now that you'd like to go ahead and go over, we'd be happy to answer them for you. And then, of course, we're going to go even more in depth in 2 weeks on the 13th of November with the starting of our 6-week 1-hour training on Sunday nights. So, I mean, the goal here is basically to help you guys improve. Like I said earlier, the knowledge that you take from these can only help improve your trading style. It's not going to be a hindrance. It's just extra little bits of knowledge that you can take and self-reflect. And we're going to have some homework assignments too, so that we want it to be very interactive. We want people to participate so that your participation indicates how much you want to grow and how much you want to learn from the process. It's not just a passive scenario. If you really want to learn, go ahead, take the time to fill out a 5-minute survey so that we can help you help yourself.
Because it was really interesting. We had like over 100 signups for this webinar, and we only got like 6 or 7 people sending us their questions. And those 6 or 7 people, they sent us a lot of questions. They were like so committed. We're like, oh my God, we love that. We want to work with this kind of people. And so, I'm wondering if you have the opportunity to ask questions and to share what your challenges are in trading and maybe find answers, like not just reading a random book and trying to find out what fits into your life, but having 2 professionals who can read your questions and know exactly where you're lacking at and what needs to be done so you can overcome that self-sabotaging behavior or whatever it is. Why wouldn't you? It's like it's a mystery to me.
Definitely, and I think that's something that Mandi and I bring to the table as 2 women is the caring for you. We naturally have nurturing, mothering personalities where we want to care for you as a trader and see you grow and see you prosper and profit. We're not in it just to say, hey, we want to make a buck, No, that's not our goal. Our goal is to help people become successful, become profitable, where you're changing your life for yourself. And it depends on how badly you want it. It's 6 hours where you can say, okay, I'm going to do a little self-investing on myself to grow as a trader and learn. And okay, so maybe I've been always at FOMO, I had fear of missing out. That was me in the beginning when I was trading the breakout strategy, which didn't work for me. And that's okay. I found another strategy that does. And it's helping point you in the right direction so you can prosper.
And the thing is, I think the reason why I became a coach is because I was in so much pain the first 6, 7 years of my trading life. I wanted trading so badly because I knew this is who I am, and I knew that this was my, my doorway to freedom. So we want to help you guys to shorten that pain periods and maybe achieve your goals much faster, because we also see the impact it had on our families. I mean, Jane being able to be with her daughter as she's growing up. It's like,
And here we go, guys. Number 2 on the way. Right here. Well, you can't really
yay!
see. Here we go. Number 2.
Little love
Well, it
nugget.
doesn't work very well, but it's okay. 6 months
Yes,
along,
sorry to be
pregnant
naughty.
mother to be, and happily working at home, making a 6-figure salary. So anybody can do it, really.
Yes, exactly. So, yeah, so any questions, please type it into the question box. It should be in your, how do you call that box? You should have like a little box on the
Dashboard.
screen. Dashboard, that's the one. Any
In the
questions?
meantime, yeah, I'll see what other ones we have over here.
Yeah.
What scanning settings do I use to locate the bottom bouncers? For me, basically, I look at the RSI extremes, and I just use regular RSI extremes, but I use it for the 5-minute charts so that if it is down below typically 20 on the 5-minute chart, I'm going to get an alert on it. And of course, it can continue to go down from there. So I wait and I watch, and I'll look at the 5-minute, 3-minute, 5-minute, 2-minute, and 1-minute chart. I line them all up and see if I get 3 greens on the candles to go ahead and indicate that that is a good reversal. And I use RSI as well as MACD. I've just started using MACD as well to see the convergence, where I will see that the momentum has changed as well as the RSI changing.
The way I trade is I look at the big picture pattern. So I look for double tops, double bottoms, head and shoulders, inverse head and shoulders. So just the classical, reversal patterns, but not just on their own. I want to see on the second top a candle reversal pattern. So a bearish engulfing, doji reversal outside the Bollinger Bands. And then I want to have, with that reversal pattern, a stochastics divergence, in the double top case, bearish divergence, double bottom case, obviously bullish divergence. So in my personality style, I need a lot of certainty. So I have like 5 or 6 indicators or setups that help me make my decisions to enter a trade. Men typically, they only have 2 or 3 convincers, as we call it. So they wouldn't need like 6 steps in order to identify if if their trade is a good trade or not, if that's a high probability trade. So yeah, again, we will work with you on your personal style, but in order to do that, you need to tell us what your challenges are, what your style is, and then we can work with you. Yes, Jane, I think we had a question also on what to do after a massive green day, and also how to do what to do after a massive red day. So after a massive green day, I know
Don't celebrate. Step away.
yeah,
Enjoy your day. Walk away with that green happiness and be happy about it. Be proud that you did a great job that day. It just goes to show that your hard work and practice has all paid off. And be inspired by yourself that you did a great job. And know that when you sit down the next day, you are a good trader, you had a good day, but the day is fresh and you need to be on point and don't have the superhero feelings where nothing's going to go wrong, because that's when you're going to get yourself in trouble. So be careful for that, but enjoy it. Go ahead and relish in your profits. There's nothing wrong with that. And as far as a red day for me, it depends. Last week I had a red week. No, not this past one, but the week before I had a red week. So I went back to, in the beginning, I traded small. I went for consistency, and I just wanted to build up that confidence again. And then I actually stepped back further and I said, you know what? I see the market's breaking down. My strategy isn't working as well. The bouncers aren't bouncing as much. I'm not able to take as much profit. So it was a great thing that I went and I reflected back, because it doesn't, even though you have a bad trade or you have a red day or a red week, you can look at it and you can learn from it. That's the way I take every single loss, is what can I learn from this? Because it's a learning experience. Like with life, if you have, say you go out and you date the wrong person, say you're dating an alcoholic, you get out of that relationship, it wasn't working for me, then if you get into that same cycle again, that's an error on you, because you haven't learned from your mistake. So go ahead and step back, see what went wrong, try to analyze it the best way that you can, and then try not to make that mistake in the future. You know, you are human, you will make mistakes, but it's a matter of trying to learn from each and every one. Just because you made a mistake, it doesn't mean you're an awful trader. You're not going to be successful at this. You're not going to be able to be profitable. It just is how you reflect on that loss. Are you going to hold it as a grudge? Are you going to move forward, basically?
And it's, even though Jane talks about dating alcoholics, it's actually not that far from choosing stocks, because I also worked with traders. There would be like 10 stocks setting up, right? And they would consistently choose the 3 losers. So the 7 other stocks would move on and, become great profitable trades, but they chose the 3 stocks that were losers. So the question is, what is it that you filter for? What is your life experience that made you filter for only the losing trades? What is your life experience that makes you filter for falling in love with alcoholics? There's a lot to it, and it's so easy to fix. It's so easy to work with it and letting it go. I always say you can't see yourself from the back of your eyeballs, so to work on that for yourself is maybe a little bit harder. Even I have a coach because I can't see my own problems. I can see everyone else's problems. I can fix them. It's so easy for me. But for myself, I have my coaches as well. Jane, there's another question. Do you think it's a good idea to trade on the PDT rule as a way to be patient and disciplined as not to lose money?
I think actually for beginning traders, it can be good because, obviously if you get stopped out, it's tough. But that doesn't mean that you can't paper trade in the meantime while you're growing your capital. Maybe you're working in a job, the 9 to 5 job that you don't really like, and you've got your PDT rule that you're following. But you can still grow that capital that you're putting aside, and I think it's a positive thing because it's going to prevent you from really burning through all the capital in your account quickly because you're rushing into trades. You're not taking the time. The biggest thing is what I see is people that jump into it, they don't have the experience, they don't have the knowledge, and they end up burning through all that capital, just like I did in the beginning. And then once I studied, it made more sense. And it helps you. I see it more of a help than a hindrance because you can do, say, your 3 trades, and then if you hold overnight, that's not going to be held against you under the PDT rule. So if you're doing a momentum swing overnight, you're okay with that. But doing it just intraday is going to be what gives you the hiccups and puts you under the 90-day 90-day regulation watch for your account. So if you practice the paper trades intraday, and you could do a swing trade overnight where that swing trade's not going to count against you, like I said. So you can go ahead and practice with your paper trading, build up the consistency, and then as you're building capital, putting money aside to put into that account to grow it, it's going to help you in the long run because you're going to be able to practice, and the practice is what's going to help you succeed.
I always say if you can't turn $1,000 account into a $10,000 account, you will turn a $100,000 account into nothing. So I traded small accounts until I actually managed to turn, I think it's on my website somewhere, I turned $150 into $1,500 in 4 weeks. And I did that over and over and over again until I knew I can do it. And then, only then I I have to say, after losing 2 big accounts, I started changing my approach and did that. And then only after I knew I was able to turn $150 into $1,500, that's then when I started putting putting more capital into my account again and trade a big account. Again, I could do that because we have brokers where we can trade on a small margin. So we have another question, Jane.
Okay.
Which is an emotional question. Do you think there is an increased amount of emotional trading being a female trader? And what I would say to that is, excuse me, gentlemen, there is definitely before getting our time of the month where we are prone to being more emotional and hence making more emotional mistakes. There is the changes in life when you approach maybe menopause, when it gets a little bit harder because you have a new emotional um, set of rules or, emotional experiences that you now have to adapt and adjust as a trader. I have seen traders using that as an excuse for making bad decisions or not doing what needs to be done. It's not an excuse not to do your job. So your job is to do proper scan. Your job is to follow your system. Your job is to exit when the trade is exit is being triggered. Your job is to put your risk management in, your stop losses, your profit targets, whatever you do, right? It's not an excuse for that. However, it sometimes gets a little bit harder during those times of your life, and you just need to know yourself so well that you scale back, trade smaller amounts, and just manage it, right? Now, if you have someone like Jane who is pregnant, it's a very different story because, Jane, you get like surges of hormones, right? And then how is the experience for you actually being
Well, the
pregnant?
first month that I was pregnant, I didn't know what was going on. I just wasn't really following my rules. I couldn't figure it out. And then I found out I was pregnant, and it was like, aha, light bulb. Okay, now I understand. Like, you end up getting a brain fog, almost like if you've ever had a really intense workout and your blood sugar is really low. For about a month, my brain just wasn't fully functioning because I had all the hormones going. I was exhausted. And that's just part of pregnancy, you know. I do have to recognize that when, as things change with my body, as the nutritional requirements change for my body, that my blood sugar will affect the fogginess in my brain. But that can also happen to anyone. You know, if you go all day trading and you're not eating, it will affect your brain function. Same thing if you don't drink any water because you're 80% water. If you don't have water in your system, you are
Cheers.
going to end up, it's like you see a plant that's hasn't been watered in 2 days and it's, you know, it's all wilted and everything like this. You give it water and then in 3 or 4 hours it's upright, it's working like normal. So we need those simple nutritional attributes to function fully. It's not just sit down in front of your computer and trade. You know, it's a whole big picture of emotions, of your nutritional needs, taking care of yourself, everything in balance, basically. I mean, I've done a lot of yoga. So when things are out of balance, my emotions go off, everything just sort of goes out of whack. And you can't trade 24 hours a day. It's not going to work. You're not going to, I mean,
Yeah.
it's not healthy to do that for your life.
And that's why we work on the wheel of life. Actually, I have a wheel of life on the back of my wall, where I make a conscious effort to really look at all areas of my life and work with all areas of my life because I love trading so much. I want to be on the screen for 24 hours a day, but it's impacting my decision-making process. It's impacting my ability to consistently perform at the highest level, hence have the profits that I want to make. So I know it's counterproductive. Hey guys, I love your questions. We have another question here. Thank you so much. It's in your prior video, you mentioned you had to take a pause to reevaluate your entries. You said you were anticipating the trades rather than waiting for confirmation. Could you touch on that mentality and what you looked for on the charts? That's for you,
Definitely. I
Jane.
mean, I was like I said, I was trying to anticipate the reversal happening. And I was, at that point, I wasn't super diligent on using my stop to get out. And, you know, I admit it. And then once I stopped, I was more excited by all the alerts that I had going on. If you ever use the trade ideas scanners, you will hear right at open, there's a ticker going off every 5 to 10 seconds that it's being screamed out at you. Not screamed, but you know, you're being alerted to. And so it can be exciting, right? And I was looking at them, I was like, okay, great, okay, great. But then I realized too in my trading before that when I'd studied the market, there's certain times of day that's better to get into an entry for a reversal, because I see that you see people that will trade for 30 minutes for the days. Some people trade for an hour. Some people will trade and leave at noon. So you will see certain times of the day where it tends to be better as well. And I was forgetting that, you know, and that was part of
Mm.
my pregnancy too, that, you know, I realized too, I wasn't taking snacks as much in the morning. And I typically trade in the morning. So I needed to fuel my body more so that my brain was fully functioning. And I was also I was getting in because I wasn't thinking clearly again. And once I stepped back and looked at it, it was a whole new week the next week, you know, and that's part of
Yeah.
life.
Clarity, right? Suddenly,
Yeah,
clarity. Yeah.
exactly. So I hope that helps you guys. I hope that answered that question.
Well, with that anticipating traits, I have also experiences not being pregnant. So what happens is when I know a turning point is coming, I get overexcited, right? So I'm like anticipating, waiting for that turning point, and I get into early fear of missing out, right? Wanting to be smarter than the market, you know, all those things that are going on for us, and that's okay. What is happening in that moment is that you guys, you all have heard the term of being in the zone. What does being in the zone mean? It means being present in the right now, being totally involved in your trading in the right now, not thinking about your future, not thinking about the past, just being in the flow with the right now. And it's kind of like when you're in a balloon up in the air. You can't hear any noise because you're traveling at wind speed. So even though you're traveling really, really fast, you don't hear any wind. It's like silence. And that's how trading the zone is. When you start anticipating trades, that means you are in the future. When you are feeling pain about your trades that you stuffed up just, you know, yesterday or just an hour ago, you are living in the past. So the trick is to bring you back to the present, right? Like Eckhart Tolle said, you know, Eckhart Tolle is a real great trainer on how to be in the present. So yeah. Another question, how to start to find trading signals for 16 months, but I don't know. I'm not quite sure what you mean. Could you please elaborate on that? And it is Michael. So if you could just retype the question, it would be really helpful. In the meantime, we go on to the next question. How can I learn to think like a trader? So the best way to learn to think like a trader is, number one, modeling traders who are successful. You will see that Jane and I, we think very, very differently because we're like very different personality types. Find a personality type that is similar to yours and then look at how they think, what makes them successful. That's one way. The other way is to study what it takes, because even though we are different personality types, there is certain rules that you just need to think that way in order to be successful. It's kind of like gravity rules, you know, no matter where you live, no matter your societal background, your culture background, gravity is gravity. And so one of my favorite books is really Thinking Fast and Slow. And I'm just trying to find it, and I can't. It was somewhere in my, right here. Thinking
Well, that's
Fast
it
and
too.
Slow.
That was one of the questions that we had online as well.
Oops.
Thinking fast and
That's the
slow.
one.
And then, you know, for me, guys, ones that I found that helped me learn from other traders, just like we want to give back our experience, are market wizards as well as Momo traders. And I'm actually working on a book right now about female traders as well, because there's not that many female traders experiences out there. And so I want to share that to everybody. Because also females tend to be a little bit less risk averse because we tend to just be more cautious. We're not that much of a risk taker. We tend to assess everything a little bit more. And so there are some very prosperous female traders out there, but market wizards and Momo traders, which talk about different traders' experiences and their positives and their negatives that they've brought to the table. And I think the more viewpoints you can take, the more you're going to learn to see what works for you.
And I was so lucky in 2011. I worked with this guy, Steve Ward. I first worked with him as my coach because I went through a little bit of a tough time, going through a long-term relationship breakup, as we do sometimes. And my trading went totally off the rails. So I worked with Steve in order to get myself, you know, back on track. But then after that, I also helped him market his training. He's just amazing. So yeah, this is one of my favorite books, High Performance Trading, that Steve wrote. It's amazing. So again, Steve only works with hedge funds now, like, you know, the big boys, the big banks, energy, institutional traders. So he also imparts a lot of knowledge. That's where I also have been trained and learned how to think like a professional trader. I didn't invent it myself. I learned most of the stuff from Steve. Jane, we have a question. What is MACD?
MACD. Well, you know what? I don't really know what the acronym stands for, but it will definitely, as most indicators will show you pretty much the same indication, but the MACD will show you the convergence of the slow and the fast. When they cross, you're going to see that there's a change in the momentum, and typically it's going to go, obviously I look for the bottom bouncer. So when I see the cross come up on the fast side, that it's going to go ahead and continue up more quickly, that more people are interested in buying the stock than selling the stock at that moment.
Yeah.
Mandi, for you?
Yes, I don't use MACD. I use stochastics, which for me is the same thing because I only use it like Jane does as a divergence or momentum change indicator. Again, there's traders out there, they know all the mathematical calculations behind each indicator. I have no clue. All I know is how I can make this indicator work for me. And that's all I know. I'm really limited with that stuff. I work with a group of Forex traders. They're all engineers. Oh my God, they come up with those mathematical formulas for an options, black shorts. I have no clue what. And it's like, great, but how do you apply it in trading? I don't care, but they love
And
it. So, yeah.
for finding out, the official description of certain indicators, and I would send you to Investopedia because they will have,
They're great, yeah.
many, many different descriptions of each indicator. Sometimes they have different videos as well. So you can see, like Ichimoku Cloud. I learned a little bit from Maddie Owens about Ichimoku Cloud, which I use sometimes, but not really. But, it's interesting to always learn something new. That's it. I'm always learning, and I'm not afraid to go out there and say, okay, well, I might not know the exact reason behind it, but I can help point you in the right direction so that you can learn to the utmost knowledge that you want on the subject.
And as I said, I have been trading for over 15 years now, and I'm still learning. I'm still looking for new avenues to reading the market. And that takes us to a great next question. Hi, have you both the confidence that no matter market conditions, you will be able to make a living as a trader? Yeah, definitely. Yeah, no worries. What do you reckon,
Yeah,
Jane?
I'm seeing that now. As I said, I stepped back. I saw that the market's starting to break down. I looked at the overall SPY and I said, you know what? I see it day to day, and I see it with the buying and the selling. I see that it's turning into more of a bearish market for the US market because there's just not as much bouncing. And it's a matter of being adaptable and not being rigid. You have to be able to flex with the market as it changes. And you can't just have one strategy. You can't just be along. I mean, you could, but in a bearish market, you're not going to prosper as much. So you have to be able to use the flip side of the coin and feel comfortable shorting and knowing that, okay, well, same rules apply. Get out fast if it goes against you. Just if you have a bad entry, okay, you can move on to another stock, or you can watch that stock. Maybe it's going to, your timing might have been off. You can perfect that new strategy, but do it at a smaller scale. If you're switching strategies, go ahead and position smaller. Build up the confidence with the new strategy if you think that the market is changing. But don't fear away just because you don't want to go long, you just want to go short, or vice versa. Feel free to dip your toe in that water, because you're going to see, once you step outside of your comfort zone, you're going to learn and you're going to be able to grow, and it's going to get better for you instead of fearing and hiding and turning away. You're not going to grow, and you won't succeed at that point.
What we like to say as coaches is we like to expand our comfort zone. So stepping out is maybe a little bit scary for some, and others, they thrive on the stepping out because they look for a good challenge. And for others, it's like expand your comfort zone. So I have different strategies for different markets, and that is just simply experience, because I would be trading my reversal patterns and they would fail and fail and fail. And I'm like, oh my God, what's going on? I just have one losing trade after another. until I learned new strategies that I then apply in those different markets. And yeah, I can read the markets pretty well now. If one market doesn't work for me, I just switch to another market. Which takes us to another great question. Oh my God, I love your questions, guys. That's really, it's so much fun. Trying to find a stock to trade in the morning, what are you looking for as a trade? And I think that's for you, Jane, because that's what you do.
Yeah, definitely. Well, I don't know if you might not have been here right at the beginning, but basically, I'm looking at the stocks that do have the extremes for the day that are either gapped up or gapped down, and I'm watching them to see what happens right at open. Sometimes I trade right at open, you know, if like GNC on Thursday, that one, it gapped down huge, and I knew once I saw it going up at the beginning that those shorts were going to start to go ahead and cover, and it was going to go ahead and spike that stock up. So I went ahead and went long, I think at 932. You know, I did give it a couple minutes to go ahead and set up and show the direction for the day, but I had a tight stop. I went ahead and put in a stop to protect my profits, because I like to do that. As it's rising up, I'm going to go ahead and put in a stop. I'm not going to let it go against me. That was something in the beginning. I was a deer in headlights. I'd watch it go up and go down, and I was never taking my profits. So I learned from that about myself that I need to go ahead and protect myself and protect my profits. So I say Carpe Profit. Go ahead and seize it. If it's a profit, it's going to grow your account. And vice versa, if I see that a stock is breaking down on the day, you know, I'll try to get some shares to short. And I know that typically I will see a reversal around 10 o'clock, because you have those 30-minute traders that are in and out of the market very quickly, and the shorts will tend to cover, and it will tend to reverse roughly 10 o'clock in the day. So that's what I look for on the oversold stocks.
Well, I love trading openings. So I trade the opening of the Aussie 200, the opening of the DAX, and the opening of the Dow if I can stay awake, because it's pretty late for us. That's like my best trades. Again, it's quick and fast, and I thrive on that because this is how I used to do my show jumping, right? I don't perform so well during the day. And how do I know all those things? Because I keep hardcore statistics. Like, all my trades are being linked to a trading software that keeps all my statistics. I know the best hours. I know the hours I'm performing best. I know the days I'm performing the best. I know the months I'm performing best. I know which markets I perform best. So I know each and every single bit of statistics that I can find about myself, and hence be able to work with myself and my weaknesses and my strengths. So that's, yeah, I trade openings. That's my forte. Now, another great question. Do you ever re-enter a trade after a loss at a better entry point? Now, that depends on your trading software as well, because with my trading software, I can enter trades individually. So let's say I go short on one trade, I can go long on another trade in the same stock or in the same instrument. And let's say I'm in a longer term trade and I have a bigger picture stop loss, I can re-enter a trade as its own trade again in the same instrument. I know when I was trading with a professional trading software like TT Traders. Traders. Oh my God, I can't even remember the name. TT, you know, the stuff that we use in prop firms. You can't do that. So if you, let's say, open a long on the ES and you put in another long, that means that now you have your trade, what's it called again? You have your trade. It's one trade. So your trade is averaged up in that case. If you're short, it's averaged down. So I would not do that if I have a software that only lets me average, but I do it with the software where I can treat them as individual trades. Yeah. How about
And
you,
for
Jen?
me, I would say yes. You know, if I get in and I see a stock's breaking down and I'm looking for the reversal and I get an indication that it's starting to reverse and it's just a bounce, I will go ahead and get out and wait, and I will look and watch it for the day and see the progression and the breakdown of the price cycle, and when it's starting to reverse on the chart, primarily on the 5-minute chart. because that's going to indicate to me more, you know, you're going to see a bullish doji at the bottom, and then you're going to start to see a green candle, and I will wait for that to go ahead and get back in. Whereas when I was saying before, I was anticipating it, I wasn't necessarily waiting, and I wasn't getting out. I was just holding it. And it was, yes, my trade was correct. I was trusting my trade, but it was painful to tie up the capital and sit there and be, you know, the trades do work statistically, which is why my, you know, my trade average is about 69% win, because the trades do work for, and my comfort zone with them, I do trust the trades, but I would much rather get in. Like, I've had some amazing trades, even in the last week, where I got in 5 cents off the bottom, and it was due to patience and waiting and getting an RSI extreme alert where I see, okay, wait, whoa, it went way oversold and it's going to snap back. I also use Bollinger Bands. I forgot to mention that too, that on the 1 minute chart, if it drops down and it breaks down on the 1 minute chart, or vice versa, it'll go and it'll spike outside of the Bollinger Bands. You will see it come back right back. So you can do a really quick scalp of that stock. And sometimes, you know, if it's dropped $5, you're going to be able to do a scalp of $1, $1.50. And it's going to be a great trade, but you got to be fast.
Yeah, the thing is, you know, what needs to be considered is, was your timing out of whack when you got into a trade? And so it's a valid reason to get back at a better price. Also, I mean, we're not really clear on, did you get into a trade? Are you currently in a loss? Are you adding to the trade, or did you get into a trade, took the loss, and look for a new entry in the same direction? So it depends also on what the circumstances are. But generally speaking, was your timing out of whack, and that's why a re-entry is actually a valid reason, or is the market just not working for your trading strategy at this stage? So, as I said, I'm a reversal pattern trader. When my dojis, for example, if they fail, that means my reversal patterns don't work. A trend has started, and reversal patterns, they fail in trends. So to get back into the market then would be painful, would be good.
And that's why it's best to
Yeah,
wait and be present in the price action. And if you get that indication and it goes against you, that's why you have a stop.
exactly. Now, someone thanks us for taking the time. Thank you for acknowledging us. Really
Yes,
appreciate
thank
it.
you.
And again, thank you for everything. It's our pleasure. It's another
Yes,
person.
definitely.
Is
Well, I
there
think
any book? Mhm. Is
I
there
was going
any?
to say, I think we might be wrapping it up to like maybe one or two more questions.
Yeah. Okay. So is there any books that you guys have read that have helped you with your trading careers? So I think we covered that before with the books. Jane, after you've screened for stocks and have a list that you might trade, what do you look for in that list to pull the trigger on one of them?
Well, I have my, you know, my stocks that I didn't really do watch lists too much before, because I like to trade right in the moment. I like to see the price action. I like to see what's active. And so I will create what looks like the chart is setting up for a good reversal. Sometimes that's going to be more of a longer term trade for me. And then really intraday, I'm looking at the ones that are volatile and that are at an extreme. So on my watch list, if I create one the night before, I'm going to see, okay, well, sometimes I have 80% that they've gone on a long, you know, if I'm looking at more of a long reversal type trade, that 80% of them are winners for the day. It's just a matter of how patient you are to get at that good entry. Um, and I'm looking at those for entry points. I'm not going to jump right in and open. I'm going to wait and see, and I'm going to see what's going to happen to the stock and let the price action more dictate my action, instead of anticipating or saying, I want to get in this stock because I see that this is going to set up. Um, there's some more longer term stocks, like I have Novavax, that they had a massive drop from $8 down to $1.13. I got in at $1.16 and sold at about $2.30. So I had a great swing trade on that, because I know that as a value stock from before, because I was a value trader first, and then I came into day trading and intraday trading. So I do sometimes use the fundamentals in finding my swing trades and seeing that it's at an extreme. I look at the ones, I'm more of a bargain shopper, so I do that with my stocks too. I find the bargain stocks and I will hold on to them and let them grow. But then when I see them breaking down or breaking a support, like I had Union Pacific and OLED, and I saw that they broke support levels, so I went ahead and I cut them because it looks like the market's just going to get worse, in my opinion. And so I went ahead, I'll get in at a better entry. But why tie up the capital now and just let it go against me in the long term?
Great. So we still have so many more questions, and maybe, Jane, we can respond to those questions in a different recording, maybe that you put on YouTube as well. How is
For
that?
sure. Yeah, that
It's
sounds
getting
good.
a
That
bit,
sounds good.
and
With
I'm
my
really
little
proud of
2-year-old
you.
running around on a Sunday, I'm a little
Yeah.
tired. I won't lie.
And as you guys know, Jane loves bouncing stocks, and so she
Yes.
loves bouncing on her ball, and she didn't
Sorry,
today.
guys. If I did that and it was distracting to you, I'm sorry. I have a physio ball. It helps with my posture, especially with pregnancy, to not have back pain. And I highly recommend trying one if you have one. If you don't have one at your desk, that's all I use, and I don't have any back pain or carpal tunnel or anything like that, so I love it.
Fantastic. So thank you, everyone. Really, really appreciate. And is your course, will you be teaching us the fundamentals? Um, just one quick question. Someone's asking if we will be teaching fundamentals, technical analysis, and reading candlestick patterns in that course. We might not go into that much detail in terms of technicals. What do you reckon, Jane?
Well, we will touch, we're going to have it be like today, guys, where it is going to be some technical and some psychological all intertwined because it does coincide in all, it's full circle. You've got to have your mind and everything working to be able to function fully technically, but there is so much information and so much to cover about getting into trading. I don't think we could possibly cover it all in 6 hours. We are going to be like this. We will have the question and answer sessions afterwards, and it's all going to be available online too for download. If you like, we have people around the world. If you're not able to be present right at the time of the webinar, just shoot us your questions and we'll do our best to answer them throughout the webinar, and it will be recorded so you can download it later. But I don't think it's physically possible to cover everything technically as well as the mindset training to get into trading in a 6 hours course. I don't think it's possible, but we will do our best to get the technicals and the psychological for you.
Yeah. And I think it's, there's so many trainings out there already on fundamentals and technicals. And what our goal was is to deliver the missing piece because there's so much more to trading than charts and bars and moving averages. And we want to cover that what comes before that. So the mindset, the what to do when when your trading doesn't work, how we look at the market, which is very individual. So more learning from our experience than learning textbook knowledge. Textbook knowledge, yeah, you can get everywhere, and we're happy to give you some resources where you can maybe learn about that. But
And just like
yeah.
tonight, we have a guideline of what we want to cover, but we're going to be open to questions for those that sign up. It's really about helping you and helping you blossom into that big, great, profitable trader and not just this is the strict outline that we're going to go on, and we're not going to having the feedback and having the interaction from you guys helps you grow and helps us determine what's the best for you, because that's why we want to do this. Mandy and I have the same mindset of we want to help other traders and we want to see you succeed, and so interactive and being a participant will help you help us to help you, if that makes sense.
That's the one. So thank you for all your questions and thank you for all your thank yous as well. It's so nice to know that we actually were able to make a difference.
Yes, thank you
So
all.
really
It's
appreciate it.
that's one thing I think that's different too about Mandy and I is we want to help others, and the more that I mean, you guys know me from Twitter, you know me from my blog, you know my new YouTube channel. Like I'm looking to help people because I started off, I'm still here in my basement. You can see in my basement office, a mom, stay-at-home mom, and it's just slowly grown where I want to share and I want to help more people because you can do it, you can prosper. It's going to take time. And Mandi too has the experience. She's got way more experience than I do, but it's about the enthusiasm and you can do it and you can take the time to learn. Time frame might not be the same for you as the person, on the webinar that's right down the way that's asking another question, but everybody starts from a different level and everybody progresses at a different speed. And that's the beauty of being human. We all have we're all individuals, but we can still prosper and change our lives for the better.
Yeah, and we've seen what impact it had to our lives, and we want everyone to have that. So not being stuck in traffic in the morning, but going for your run by the beach. Yeah,
Exactly.
on that note, thank you, everyone. Thank you, Jane.
Thank you, Mandi.
So
And this will all be up on YouTube as well for you guys to reference permanently, but the training is going to be just downloadable for those that do go ahead and purchase it, and it will be downloadable afterwards as well with the 6-hour package.
Fantastic. Wishing you all a fantastic day, night, wherever you're in the world.
Yes, and happy Halloween tomorrow, and Carpe Profit. Seize those profits. Have a great green week, guys.